Hello, this is Saku VietnamStock. Great work this week. Let's review the Vietnam stock market performance for the week of December 16 to 20th, 2024. VN100 Index Performance. The VN100 Index dropped 0.8% from 1,316 to 306. This week saw no major news to drive the market, and the index moved mostly sideways. However, on the evening of the 18th, the U.S. Federal Reserve revealed a hawkish stance, leading to a 10-point drop in the index and a pessimistic sentiment in the market. Sector Overview. Similar to the index, there were no significant movements by sector, with gains and losses staying within a narrow range of less than 3%. Until clearer signals emerge, potentially after the inauguration of the new U.S. President Trump, the market is expected to remain directionless with no discernible trends in sector performance. Top 5 gainers and losers by stock. Top gainers. Individual stock movements also showed no prominent trends, with the highest gain reaching only 5%. Top gainer, KDH, Kangdian House. KDH outperformed peers in the real estate sector, benefiting from investor focus on high-performing stocks amid stagnant index movement. Second place, DBC, Tobacco Group. The agricultural and food manufacturer saw a 4% rise thanks to strong performance in its pig farming business. Pork prices surged significantly and further increases are anticipated during the holiday season, boosting the company's outlook and attracting strong buying interest. Top losers. Second worst performer, DIG, Development Investment Construction. DIG dropped 8% after announcing a capital increase of approximately $130 million on the 19th. Concerns over its usage of funds, partially allocated to working capital, including corporate bond repayments, raised worries about financial stability, leading to the decline. Worst performer, NKG, Nam Kim Steel. NKG plunged 24%, the largest decline of the week. Weak demand for steel in China and Europe caused a sharp drop in steel prices. Amid worsening performance expectations, the company raised $22 million on December 20th, heightening concerns about its liquidity. Weekly News Review. For more details, please check out the news links shared on my Twitter posts. News 1. The United States has overtaken China as the top destination for Vietnam's agricultural, forestry, and fishery exports. Exports to the U.S. accounted for 21.7% of the total, surpassing China 21.6% in second place and Japan 6.6% in third place. In exports to the U.S., 11 product categories exceeded $1 billion in export value. Year-over-year growth was particularly notable for coffee, plus 57%, pepper, plus 53%, rubber, plus 25%, and rice, plus 11%. While exports of agricultural, forestry, and fishery products to the U.S. are rapidly increasing, challenges remain, such as heightened U.S. trade protectionism and rising demands for sustainability and green standards. China, which fell to second place, still presents opportunities for future export growth. Vietnam has signed export protocols with China for several agricultural and fishery products, such as frozen durian and fresh coconuts. Additionally, Vietnamese agricultural products are now being sold on major Chinese e-commerce platforms like TikTok, Taobao, JD.com, and Xiaohongshu, signaling improvements in export infrastructure. However, risks for exports to China include frequent warnings about excessive additives, mold contamination, bacteria, and improper labeling. Addressing these issues will require improvements in quality and traceability of origin. 2024 export performance and trade balance. Vietnam's total agricultural, forestry, and fishery exports for 2024 are estimated to reach $62 billion, an 18% increase year over year, far exceeding the annual target of $56 billion. The trade surplus is projected to reach approximately $19 billion, a 53% year-over-year increase, marking a record high. Thoughts on the article. Vietnam's agricultural, forestry, and fishery products have driven this year's export growth, particularly exports to the U.S., which have surged as the country struggles with high inflation. Although export growth to China is not as pronounced, the potential remains vast, considering the enormous market of 1.4 billion consumers. Capturing this market could lead to significant business opportunities. While this article highlights the growth of agricultural exports, seafood exports are also performing well, as shown in another report. Vietnam's seafood exports in 2024, a look ahead. Vietnam's seafood exports are expected to exceed $10 billion in 2024, supported by stronger ties with key markets like the US and the EU. Growth in the seafood sector is being driven by aquaculture and marine fishery products. Main products: shrimp, estimated export value of $4 billion. Pangasius, estimated export value of $2 billion. Tuna, estimated export value of $1 billion. Together, these three products account for 70% of the total export value. Top importers: China, the largest importer, with $1.7 billion in imports as of November, a 19% year-over-year increase. US reached $1.6 billion, a 21% year-over-year increase, ranking second after China. Challenges: marine fisheries. Meeting the requirements for combating illegal, unreported, and unregulated IUU fishing demands greater transparency, but companies are struggling to obtain vessel data. Tuna, a regulation mandating a minimum catch size of 0.5 meters, poses challenges for sustaining raw material supplies and may require policy revisions. Shrimp and Pangasius. Fierce competition from Ecuador, India, and Indonesia highlights the need for improved breeding techniques and cost reductions. While agricultural exports are showing remarkable growth, seafood exports are also performing well. Despite concerns over price competition with other countries, seafood remains one of Vietnam's traditional industries, and leveraging its strengths is likely to sustain further growth. Next article: NVIDIA partnership opens new opportunities for Vietnam's semiconductor industry. In December 2023, NVIDIA and the Vietnamese government signed an agreement to establish an AI R&D center. This center will initially employ around 130 staff members, with plans to expand its workforce in the coming years. The center is expected to serve as the foundation for Vietnam's AI ecosystem, acting as a magnet to attract companies providing AI-related equipment. Additionally, NVIDIA has acquired the Vietnamese startup VinBrain, positioning it as a cornerstone for the AI R&D center's establishment. Why NVIDIA is deepening its partnership with Vietnam. NVIDIA's focus on partnering with Vietnam is closely tied to its business strategy. NVIDIA does not engage in direct manufacturing, testing, or packaging. Instead, it concentrates exclusively on advanced chip design, a stage considered the most value-intensive in the semiconductor supply chain. To produce semiconductors, NVIDIA must collaborate with other companies for manufacturing processes beyond chip design. Vietnam is seen as a promising partner in this regard. If companies within NVIDIA's semiconductor ecosystem relocate to Vietnam, the country could see investments worth tens of billions of dollars. Current state of Vietnam's semiconductor industry. Vietnam currently hosts 174 foreign investment projects in the semiconductor sector, with total registered capital reaching $11.6 billion. Domestic tech companies plan to focus on labor-intensive processes such as design, testing, and packaging. Talent development. The Vietnamese government has launched an initiative to train 50,000 semiconductor engineers, prioritizing preparations to strengthen the chip design process. While chip design overlaps with NVIDIA's expertise, it accounts for 60% of a chip's cost, making it a critical area. Vietnam aims to collaborate with NVIDIA while independently advancing its domestic talent development efforts. Currently, 13 semiconductor investment projects worth $3 to $4 billion are under negotiation and are expected to be approved by early 2025. Simultaneously, the Ministry of Planning and Investment is developing specific collaboration plans with NVIDIA to position Vietnam as a hub for high-tech industry investments. Thoughts on the article. There have been numerous reports recently highlighting NVIDIA's deepening ties with Vietnam. Last week, news surfaced that China had launched an antitrust investigation into NVIDIA. As NVIDIA searches for its next strategic base in Asia, Vietnam, with its prime minister taking the lead in fostering collaboration, appears to be a highly attractive investment destination for the company. Next article: Vietnam's GDP growth rate expected to outpace regional competitors. Vietnam is projected to achieve standout growth among the 6 major ASEAN countries, outpacing its regional competitors over the coming years, according to global economic consultancy Oxford Economics. Vietnam's GDP growth rate is forecasted to reach 6.7% this year and 6.5% next year, driven by the strength of its manufacturing sector and the rapid recovery of domestic demand. The manufacturing sector is expected to remain the primary driver of GDP growth next year. By 2025, wage growth, fueled by the spillover effects of foreign direct investment (FDI), is anticipated to bolster broader consumer spending. Data shows that workers in the FDI sector earn wages approximately 14% higher than those in the non-state sector, highlighting the potential for rising wages. Tourism revenue contributed 6.6% of nominal GDP in 2023, serving as a growth tailwind. Vietnam has been the second biggest beneficiary of tourism in Asia this year, following Japan. While the growth in tourism revenue is expected to slow next year, its cumulative effects are likely to continue supporting domestic consumption, semiconductor demand, and other growth factors. On the downside, the global demand for semiconductors is expected to decelerate next year. This is attributed to base effects and short-term slowdowns in semiconductor production and demand. Excessive inventory buildup following supply chain disruptions has led to overstock issues, while demand in sectors such as automotive, mobile, and computing remains sluggish. The Asia Semiconductor Export Index, developed by Oxford Economics, shows a slowdown in semiconductor export growth across the region since the start of the year. In Vietnam, a decline in electronics component production on a year-on-year basis is expected from mid-2024. However, manufacturing is still expected to drive growth next year, with a boost from artificial intelligence (AI)-related tailwinds, particularly increased global spending on data centers, which could bring significant economic benefits. In the export sector, anticipated front-loading of export orders in response to tariffs may offset short-term declines in electronics demand. Moreover, as the U.S. remains Vietnam's largest export market, expanded fiscal stimulus in the U.S. could serve as an upside factor for Vietnam's economy in 2025. Foreign direct investment and economic growth. While FDI inflows into Vietnam are expected to continue, the pace may slow slightly. Investment growth is forecasted to reach 7.2% in 2025, surpassing this year's projected rate of 6.9%. This outlook aligns with predictions from other global financial institutions, including the Asian Development Bank, ADB, HSBC, and Standard Chartered Bank, reflecting a strong consensus on Vietnam's robust economic growth prospects. Thoughts on the article? Oxford Economics, a respected US-based research firm, also predicts strong growth for Vietnam. It's interesting to note their focus on the delayed yet increasing visible effects of FDI and tourism revenue on the overall economy. That concludes this video. Thank you for watching.